Applied Digital, APLD, might be the most misunderstood AI play in the market right now. Wall Street just punished the stock after earnings, but here's what they missed. This isn't a company in retreat, it's a company making a bold pivot to become the infrastructure backbone of the AI era. Backed by NVIDIA, loaded with capital, and building one of the largest HPC campuses in the country, Applied is quietly setting itself up for a breakout. And right now, it's trading like none of that is priced in. Let me show you why this could be one of the best asymmetric bets. Let's address the elephant in the room, APLD's recent earnings and no hyperscaler. Revenue hit $52.9 million last quarter, up 22% year over year, but missed Wall Street expectations due to some short-term hiccups in their GPU cloud services. The market freaked out, pushing the stock down roughly 30%. But I believe this drop is actually a gift, presenting us with an attractive entry point. Here's where it gets interesting. Applied Digital decided to sell off their GPU cloud services business, seemingly controversial since it's fast-growing, but this strategic shift actually simplifies their business, removes friction with big hyperscalers, think AWS or Microsoft, and sets the company up for a potential transition into a real estate investment trust down the road. In short, they're sacrificing short-term revenue to build a clearer, stronger, higher-margin future. The heart of my positive thesis is the massive 400-megawatt Ellendale data center campus in North Dakota. The first 100-megawatt phase is on track to launch in the second half of 2025, fully financed with $375 million from SMBC and potentially up to $900 million from Macquarie once tenant leases are secured. Right now, Applied Digital is negotiating with multiple big-name hyperscalers desperately in need of AI compute capacity. This could be a huge catalyst soon. Zooming out, AI infrastructure is booming. There's an acute shortage of data center capacity tailored for AI workloads. Applied Digital is directly in the sweet spot. Plus, they've got NVIDIA on their team, who actually owns a stake of about 3%. Having NVIDIA's backing adds huge credibility and could drive strategic customer relationships. Let's quickly look at three clear paths, bear, base, and bull cases, that illustrate how Applied Digital might play out. In our bear scenario, leasing at Ellendale stalls, cloud sale disappoints, and Applied remains weighed down by debt, stock could remain stuck between $2 to $4 per share. Not great, but I see this as unlikely. My base case, the most probable scenario, sees Applied successfully leasing about 100 to 200 megawatts by early 2026, improving the balance sheet with a solid cloud services sale and gradually increasing profitability. Here, shares likely move into the $6 to $9 range, a solid upside from current levels. The bull case, my personal favorite scenario, has Applied rapidly securing all 400 megawatts at Ellendale with top-tier hyperscalers, successfully divesting the cloud segment at an attractive price, and swiftly moving towards a real estate investment trust model. Under this scenario, the stock could see a massive re-rating to around $12 to $15 per share, making today's prices look like a bargain. So here's the bottom line. The recent market panic isn't a red flag, it's a green light. Applied Digital is fully funded, backed by powerhouses like NVIDIA and Macquarie, and perfectly positioned to meet the surging demand for AI infrastructure. Right now, the stock is undervalued and overlooked, exactly the setup smart investors hunt for. If you believe in the future of AI, it's not just about betting on the models, it's about investing in the infrastructure that makes it all possible. That's where Applied Digital comes in.